Okay, webinar on LEAPS. Generally in US, right? They call it LEAPS. They apply on long-term equities. But today we are going to discuss on index options. So not actually equity-based, but index-based. The word LEAPS actually being used in the Western countries, popularly in US. So they trade long-term options. Even Warren Buffett also trades on LEAPS, not as short-term options. However, we will be trading and discussing about LEAPS, which is on index-based options. So this has been pending since a long time, maybe 1 year and more than that. So many group members or participants are requesting several times to have this seminar, but due to some unavoidable circumstances, that is being postponed every time and didn't get a time to start. However, new year, upcoming year, calendar year 2024 is approaching. I'm about to take a trade. So I thought this is a good time to take a trade, of course, as well as to have a discussion on this. A disclaimer, this session or webinar is for purely education purpose, no recommendation, and also I have to say that I am not SEBI registered analyst or anything else. I just share my knowledge, what I learned. I just share my trades normally in the group, what I take. Nothing else out of it. So just for pure, again repeat, educational and learning purpose. That's all. Okay, so let's get into the actual session. What are the long-term options and all? So any of you speak up from your side. What is your expectation from this webinar?
Hello, sir. This is Naveen.
Thanks for giving us an introduction. Yeah. So from the expectation is, if you can guide us on how to enter the trade, how to identify the trade for the LEAPS, and what will be the point to close or book profit, and what will be the stop loss that is expected at the time of entering the trade, and how long normally we need to hold the trade, because being LEAPS, because there will be a lot of swings. So how do we manage that?
Also, in addition to that, the capital required for each trade, and how much we can scale up these LEAPS.
And also, what is the big difference between the quarterly, half-yearly, and the annual LEAPS? Is there any advantages or disadvantages?
Yeah, sure. We'll cover that one.
Hi, Ganesh. So you just explained that you are into a different segment of the option selling, right? Like calendars, LEAPS, and other stuff. If you can just help me out saying that what percentage of the capital you actually put into different strategies, and what percentage of the capital we have to actually concentrate on the LEAPS as well, please.
Sir, actually in LEAP, let's say if you deploy the LEAP, right, if the trade goes against us, right, so that time our entire capital will be blocked for that entire year. So in that case, like how to come out or what is the best way?
Okay, fine. Hope that all your expectations or queries will be addressed over this webinar. We'll start actual thing and we'll see that. Long-term options expectations is that generally in India, we trade options for 6 months and above, just is considered long-term options. 6 months or maybe 12 months and above are considered long-term options. Normally we'll trade during this kind of options. So why do we need to trade 6 months or 12 months like this? Why do you need like this? Our question is, why do you need? We have a weekly, we have a daily, right? we have a daily, we have weekly, and we have monthly. We have even quarterly. Then why do you need 6 months and 12 months options? Do you really need that one? Yes, there is a setup like who can trade these long-term options, right? So who can trade first daily or weekly? Because those who are in front of the machine, they can track the market every time. They would do daily or weekly, monthly options. But when it comes to 6 months and 12 months, is those generally those do not wish to watch the monitor daily. They don't want to worry about that 50, 100 points move, but just want to focus on options. They don't want to invest. Investment also would become zero, right? So we don't know the stock, how it go up and how it go down. So rather, just to focus on once in a week or once in a month, something like that. Those people can definitely, generally would focus on 6 months or 12 months or like what you call LEAPS. This is a for them actually. So yeah, those who can watch the machine or monitor daily or weekly can also do this LEAPS. This no like rules that they can't. Basically, LEAPS are suitable for those who do not have enough time to watch the market. Yeah, a full-time trader, active trader can also participate anyway. They have all the options. They can do everything. If you ask me, I do almost all kind of strategies in the options. I do expiry trading. I do weekly, I do monthly, I do quarterly, 6 months, half yearly, and LEAPS yearly. Wherever possibility is there, I spread my capital across different strategies. One of you asked, right, how I distribute my capital and all. My major capital is, as I told you, right, my major capital is goes for investment. Mine is investment. My main philosophy is that investment. I put entire my capital on investments. Means how money I invest. When I say investment means, of course, there is what do you call securities? Yeah, risk-defined securities. Risky assets are there and safer assets also there. When I say risky assets and safe assets. When I say risky assets means I put it in equity based. Risky assets means equity, and safe asset means I put maybe a gold. I put into government's GSECs, right? GSEC like this. And equities, Indian equities and foreign equities. Yeah, US based stocks, foreign equities. Will do that. So this is how I spread my investments. And risky assets, let's say risky assets, I put 60%, 60 to 70%. This keep changing. And safer asset is the remaining balance, 30 to 35. 30 to 35% I will put it in safer one, like liquidities, gold, government securities, Bharat bonds, all those things. That is my capital goes there. And so once by investment capital, I pledge the entire money. That's it. I pledge it. Then I do my play. Whatever strategy we call, will plan. And so when I invest in the equities, right? So there is a covered calls. I'll put covered calls. We want to take some trades. I will do cash secured Put-CSPs, and I keep applying this one. So a remaining amount, then I'll put it in index. Okay, if you ask me that equity based strategies go to around again 70% strategy, 70% capital pledged capital goes to this one. covered call, cash secured puts, anything. Remaining balance 30%, I put it in index-based strategies like NIFTY options, calendar spreads, long-term options, like this. Plus, in addition to this, I do expiry trading. There are videos I made it. You can watch it how I do. So daily expiry is there, right? So I participate in safer way expiry trading as well. This is how I do. So as of now, when it comes to long-term options, I started doing from 2022. Yes, 2022, and also I finished 2023. Now I'm going to enter 2024. This is over. This is over. This is I exited with a slight green at 10K. I'll tell you. So over the maybe 6 to 9 months I was holding, I exited with green, but 10K is not a good one. So whatever mistakes I have done, why I made only 10K, what went wrong, I'm going to explain. This is the one I invested my time, my money, I learned, I'm sharing to you back. And 23. And 2023 I closed with 10% profit. Of course, I would have to explain. Now 2024, what I'm going to do then? I'm
Sorry,
going
Ganesh,
to...
are you sharing some screen? It's still in the sensible screen only.
Oh, sensible. I'm drawing. Are you not able to see draw?
No.
Oh, good man. Okay. So when it comes to LEAP, I just have done LEAPS for 2022. I mean, LEAPS means long-term options and NIFTY options 2022, and I started 2023. 2022, I exited with just a 10K profit, just green. Maybe peak time I invested, I can tell you my investment went up to 14 lakh. You think it was just a useless. I spent around 6 to 9 months. My money was blocked for that much time. 1 lakh, started with 1 lakh, went up to 14 lakh as well. I'll tell you the reason why. And 2023, I also entered. I exited my trade in November itself. October, November itself, I entered with 10% profit overall. There I invested 10 lakh. I mean, peak, I'm telling peak, okay? Generally, I will start with 1 lakh, then it would go up to 10 lakh per lot. Now time is for 2024 options. So I was about to take the position. Order was not filled on the Friday. Maybe upcoming days I will try. So this session is like whatever I learned over a period of last 2 years. I just learned whatever I learned last 2 years, what I invested, time and money, all that I'm going to teach you here. This is what I'm going to, you are going to learn. I'm not just giving you the theory, I'm giving you my experience, I'm sharing you everything. Like this, you learn all those things. Then I'll tell you then what are the mistakes I have done in 2022. If you remember 2022, right? After Russia-Ukraine war, all those things. After that, right? Market all the way. Just 2022, all the way. Market went down. If you remember, anybody remember what was the low of 2022? 15,000. Do you remember, guys? 15,200 around 200 to 300. This is the bottom. Market fell all the way almost 18,000 to fell down 15,200. Unfortunately, I entered here. 15,200. ATM. I started with ATM. ATM short started. So from there we all know, right? So from there it went up to 18,500. This is where market went up to 18,800. See, so how many points is really more than 3,000 points? I entered, remember this underlying word, ATM short started, ATM storm started. So what was the mistake I have done? Mistake number one, when market was deeply corrected and bottomed, I entered at deep correction. I entered into a very deep correction. That was the problem. So we should never enter market was deep correction. So I entered a deep correction. Point number two. Point number one. Point number two, I entered ATM. These two are not a right. We should never. So market was deeply corrected. That was not the right time to enter. Market has been like up and down. Came to normal neutralized point. That is the time we need to enter. When I entered 2022, time was very bad, and I didn't know much about that. I just premiums were very high. I thought, okay, very good premiums. I think I got around 3,000 or 2,000 plus premium price I got. It was very attractive. I entered. Now, what has happened? And whatever lessons I learned in 2022, I implemented 2023. But I'll tell you what was happened 23. 23, I entered again. 2023, I entered again ATM. It was not a deep correction, but ATM. I told you two mistakes, right? One is deep. I entered a deep correction at the bottom. Second one is when it was ATM short straddle. So 23, point number one, I escaped. It was not deep correction. I entered for 18,000 short straddle. Earlier was 15,000. 22 is 15,000. Remember, where is 15,000? Where is 18,800? So usually delta, very delta negative, right? Short straddle. So that's how I was trapped. Now 23, I entered 18,000. After 18,000, then market was corrected all the way to now that time 16,800. It was good. My strategy was unprofitable. Immediately, I think 2-3 months, it came with around 40% profit. But I didn't enter. I didn't exit. I didn't know that, okay, it's a long-term option. Let's wait. Will be around this time. We would exit. That's how I thought. Then again, market started trending. We know, right? 16,800 to all the way. Market 16,800 to market went up to 20,200. This is my story. Then what would happen? So then again started giving losses. So because we know, right, 16,800 to market almost all the way unidirection travel to 20,200. When market turned towards like journey like this, then again short straddle would give losses. So then I ended up making several adjustments, pumping too much capital to protect, to bring more premiums. Of course, finally I closed the last month. Again, right away market took back and forth and again, right? So it came down 20,200 to, we know, right? 20,200 again. What has happened? This came back to almost 18,800, right? If you remember. Then 18,800 to market came back to 19,600, even 650 also, right? Then I exited here recently. Of course, after that again it went another 150, 250 points also, but I exited here. This is the time, because while we make more adjustments, range would come down and the risk would go high. So that is the thing. So these are the mistakes. So mistakes number 1 and 2 is we should not enter and it was deeply corrected, and we should not enter ATM short straddle. That is the lessons I learned. Now, then I will give you some statistics that we just all of us to know that. Based on that, what is the strategy or what is the strikes we can do? I'll explain all those things. Let me open that yearly chart. We hardly see yearly chart, but this is the time we need to look into yearly chart. Means that's a 12-month chart. I just opened 12-month chart. All of you just observe this. What do you feel? What is your conclusion? Can you draw any conclusion based on this chart? This is a yearly chart. Means start from January 1st, ends December 31st. That is the candles, yearly candle. Then very easily you can draw the one conclusion. Can any of you meet out and say, just share your thoughts by looking at the chart?
Rising market from 2002.
Okay, 2002 is rising. Okay. There are red candles also. Okay. Then?
Correction is pending.
Correction is pending. Okay. Does it show some correction is pending? We don't know. Okay. Which means that it's rise. So alternately, it has to fall. That is our expectation, right? We would be thinking. Okay. Then any other guess? Well, because data
is always rising.
Very good. That's a good point. So data is important, and out of data, our conclusion is also important. Without that, we cannot trade. If you trade, that could be like a gambling. So we should not do that. Here, all of you here is to not gamble. Just understand the data and take the trade accordingly. Yes. Market is rising, yeah. And then?
It is trading around 4,000 points.
Per annum, like that?
Yes.
Okay, 4,000 points. Okay, good. That's a good point. So all of your observations are correct. And let me tell you my observation as well. Let me see. When I look at this yearly chart, most of the time, every year it is rising. Most of the time. This is this chart is for 33 years. 33-year chart. What data we need? This is 33 years chart. Out of 33 years, how many times market took negative? 1, 2, 3, 4, 5, 6, 7, 8. 8 out of 33. 25 out of 33. Market was green. What it means? Let's say what it means. 75% market was green at running. Only 25% market is flat to negative. Right? So this is the case. So what is the probability to win? So winning, we have to bet on higher probability of profit, right? What is higher probability is 75%. This is from 90. If you take from 2000, means 23 years data. You see 23 years data, then around 5 times market fell. Means then it comes to 80% uptrend. 80% was up, closing green, only 20% closing red. Of course, so this is how we need to think about. This is very important data. Without looking into this data and blindly cannot take a trade, right? When you take a long-term trade, we have to view in a longer view. If somebody asks me or somebody asks you what is going to happen market next 1 week, next 1 month, we hardly predict, right? We don't know short-term view. But somebody asks me what is going to happen next 12 months, next 24 months. Obviously, we can say that, at least, because market here is to grow, right? It's a growing market, emerging market. It has to grow until abnormal situations like war or kind of black swan events. Otherwise, market has to make money, has to continue its business. Business has to publish growth every year. Accordingly, P and EPS would go up and market would go up. No option. It has to go up. Okay? That is the market, nature of the market. So, if this is the thing, so 75% market is rising, then we'll think about that. Now, I will show you again. This is, see, I will show you. Keep watching this, right? This box. Keep watching this box. Percentage and how many points. I will show you. No, so far 23. How much percent it went? 9%. 1689 points from the low, from the last year bottom. And 22. Year 22. 4% up, and year 21 coronavirus, so 24%, 3,300. This one 14%, 1,800 points, 1,300 points, 300 points or 3%, 28%, but 2,300 points. Here 3%. Here fall is just 4%, maybe around 300 points here. So even at your personal time also you watch like this. So having seen this, again, what is our conclusion again? Yes, we have to draw some conclusion again, right? What is our conclusion now? Can anybody observe that? So rising market, how many points are likely to rise? Or what is the percentage it would rise every year? Upside is 2,000 to 3,000 points. 2,000 to 3,000 points would make upside. That's it. Only a simple conclusion. An average 2,000 to 3,000 points, which means on average, NIFTY, CAGR, NIFTY is 10%. Means if it goes 10%, now today market is standing at 19,800. This 10% is now 2,000 points rally can be expected next upcoming 12 months. Are you guys getting this point? Guys, this is the how we need to analyze. Whatever trade we take, we should take the trade to have range, upside range. We should have at least 3,000 from the current spot, which means 22,000, at least 800 tuck. We need range. Now, if this is clear, then I will show you one point as well. Okay. If this is clear now, you guys now everything is here. Now market is 19,800. Let me draw. Now market is 19,800, and we need to have a range for at least 3,000. Now tell me, what is the short straddle? This is just a plan to have a short straddle strategy in LEAPS, no, nothing else. So then tell me, then the answer is you. With you would have got other answer. What is the short straddle? What is the strikes I need to short with this data? Can anybody tell me? Now we'll go to sensible, build a custom strategy option. Yeah, we go to year 24, right? 2024. Now you guys tell me what to short straddle. Which strike we need to short.
21,000.
Sorry, repeat.
21,000.
Yeah, 21,000.
Exactly. So that's it, right? You got the answer. So that's it. So how many points we are getting here? 1,000. This is a 1,000. Together we are getting 2,000 points. So 2,000 plus a strike of 21,000 is giving you 23,000. Yes, that's all. Very simple. Now, okay, let's take this one. I will sell this. I'll sell this. Now see the range. You are able to see sensible this payoff chart. Hope, yeah. Now we will see this one. See this 53%, 1 lakh profit. What is the margin needed? 1.8 lakh. Break even. What is the break even we need? So exactly 19,000, 18,900 to 23,000 range. Guys, did you get my point here? What are the mistakes I have done? Now this is not the mistakes we are going to repeat. You guys also please don't repeat such mistakes. I repeated. I took ATM, right? I took ATM, which went wrong, which the strategy put me in trouble. Now we are making ITM short straddle. So long-term options always to take ITM strategy only, not ATM. That is the underlying sentence. We need to remember this. If anybody shorts ATM straddle, expecting that spot is ATM, spot is wherever spot is there. Now let's say today's spot is around 90,800. Let's say short 20,000, which is very brutally wrong. Now the strategy is wrong. Wrong in the sense that is not a right way of thinking for long-term options based on the data. Because market would tend to go high and it would be delta negative. You see here, I'll show you delta negative. See bottom here, delta negative. You guys are able to see. See already here, this itself is slightly negative. If you take 20,000, I'll show you. See, if you say 20,000, let's say 20,000. See how it is. Now it is delta minus 0.34. Market tends to go high, it will become more and more negative. Then what do we adjust? Very difficult to adjust. Interest rates are higher for longer. IT sector has been rate sensitive, so that has been taken sideways. And local factors like banks are beaten down because of RBI guidelines, and the net interest margin is being recorded very low compared to other quarters. These are local economic factors and inflation and all the things we need to consider for taking this strategy. After all considering this one, so last year performance is hardly not bad, not great. It's around 4%. Maybe this year definitely would give, or it has to perform well. If so, definitely market would go 20,000 now to 23,000 between any time it would go. Chances are there. So having these factors in mind, we will have to take 21,000. That's all. That's all that strategy we need to plan for this long-term options. So far, is it clear, guys? This strategy, why we need to choose the strike, what are the reasons, what are the probability of winning, risk and all we'll cover later by end of this session. So far, is it clear? Okay. Now let's say we entered this strategy, we took it. Then what next? Right? So anything is before entering a trade only we have control is in our hands. Once we take the trade, control has gone. Now we have to travel with the market, walk with the market. So we have taken this. Then you would think that. So by looking at this trade, upside risk is very less, right? Upside risk is very less. It's very clear. Now it shows that a downside risk is seems that there is a downside risk. What do you do? So what if happened downside? What is the lower break even is 18,400 or like this. Now this is the time we need to identify that support and levels. Let me take you through that. To understand support and resistance, what is the chart we need to look into that is we need to see weekly chart. Weekly chart is the best time frame for long-term options. Then we need to understand what is the support, what is the resistance. So let's find out what is the support level. Major support we can see for weekly, it appears here, right? Which is 18,800. Let me put this, yeah. 18,800. It appears this one. This is the support. This is the support. So while we keep wherever you take, wherever spot is there, but our support level to remember is this one. 18,800 is the support, major support. If it breaks, I'm just talking about the adjustment part. It means to be alert. Until then, we don't need to worry this. This is a strategy we don't worry about every time, right? Daily 100 points, 50 points, even 150 points, we don't care. So if it market continuously goes down and breaks this 18,800, then we have to be alert. Then if it breaks 18,800 closing below that, then what would you do? So if it is happening like this, what will happen is we entered into one lot, not multiple lots. Okay, we just take one lot. So we take one lot, and there is the option that we close the entire trade. Option number one, adjustment number one is close the trade. Close. That's it. Maybe you will be having a loss of around, maybe that time, we don't know. Maybe there might be loss or no loss or little loss or more loss. Whatever, close the trade. Close the trade, then Number one. Number two, then assess the market sentiment. Too much negative is there. Is it oversold? Is it sentiment is sensing that it is bottom is out? Then what we do, second adjustment is we'll take synthetic futures. What is synthetic futures? Just buying a future. We would expect that market from here, it would go high. Because more it fall, we expected below, right? From 19,800 or 20,000 to market would go another 2,000 to 3,000 points. Rally is possible for next 12 months. That was our expectation. We made it. We draw the conclusion. Now, market up by just unfortunately it take another 1,000 points down. Right? So then what would happen? So whatever market gained 4% last year, 2022, has lost. Means it would be like this, 22 to 22, 23, market has given negative. So 2 years continuously would give negative returns, very low chances. So that is the time we would go for synthetic future. What is the synthetic futures? We change the trade. So I'll show you. Synthetic future means buy, call, sell, put. That is a synthetic future. I'll show you. I'll show you the strategy. This is, let's say now market is after correcting, let's say market is here only. Synthetic futures means what we do, this sell, put, buy, call. This is a synthetic future. This is synthetic future. So it appears because market is here. I took it. Normally, this is the plan. We'll make a plan. This is adjustment number 2, not mandatory. We are panic. We don't know where market goes down. We don't even take the trade. We close it. Just sit back. Not to worry. So as part of adjustment number 2, we'll enter into synthetic futures. Synthetic futures, and also will have with a hedge if required. Hedge means will add in the money buy option, because downside is we don't know. One can enter like this. Means this is a synthetic future with hedge of in the money hedge 21,000. So if we are okay with this one can take this one. If market takes U-turn 22,000, 21,000, 22,000 onwards, it would give you profitable. But this is not a very great adjustment. Only market turns reversal, you would be gaining. Otherwise, you hardly see the profits. Okay, this is the one adjustment. So adjustment number 1, close the trade. Adjustment number 2, take the synthetic futures based on the spot. And adjustment number 3 is, if you want, what would you do? Probably, right? Say the market would reach 19,000 around, right? Add another short straddle at 19,000. Then you will check it out, that break even points accordingly. Then we'll get some more lower break even. We add, I will add it here. Let's say now today we are at 21,000. Market took 1,000 points down. Then maybe we'll add 19,000 another short straddle. What would happen? Another short straddle. See, of course it has now only if I add, I'm getting the lower break even 17,500. If I don't add these two, see, if I don't add these two, our original strategy is giving lower break even is 18,900. If we add another short straddle at 19,000, it is giving 17,500. It is giving another 1,500 points lower side. Upside is good. Still upside break even is we have very good one. But remember this, margin goes high. Earlier we in 1.8 lakh. Now it becomes 4.33. Of course, that time based on that margin would go high. So more adjustment you make, you would need to spend more capital is blocked. This is the major adjustments we need to prefer. This is the last adjustment. Don't do beyond that. I repeat, one is exit entire trade. If you still have guts starting from your market takes U-turn or goes high, enter synthetic futures. Or adjustment number 3, don't close the trade, but add another short straddle at the spot, that is 19,000, to get more lower break-even point. Then it becomes like this. This is a downside adjustment, 3 adjustments. And now, what if market goes high? Because we need to see upper side also, right? Market is going high because one day itself it would not go higher to 21,000, right? It would take its own time. Another 1,200 points are there. So it would take its own time. Even market goes to 21,000, still we have an upper break even of 2,000 more. No action. If it goes high, going higher, definitely we'll be having profitable. The strategy would be showing you profitability, and we'll just enjoy with the decay and profitable. That's it. No upside risks are seen as of now. Let's say tomorrow we say no, it would be going high and showing losses. If you can hold, you can hold. Decay would help you out. Otherwise, again, if it comes to 21,000 next 1 month, it would comes to 21,000. You will be getting loss of around 6,000. I'll show you how. Let's say date is January. January 1st, 24. Market has gone 21,000. See, 20,500, only 500 rupees loss. Yeah. So another 1,000 points rally from here. Yeah, you are getting here almost 7,000 loss. If you are not good at the adjustments or you are in panic, better exit the trade with this loss, very smaller loss. So don't hold the trade if you are not clear what to do. 7,000 loss becomes 70,000 or loss becomes 2 lakh. Even my short straddles earlier I had been getting losses like I have seen 2 lakh, 3 lakh, 4 lakh also I have seen. I was holding, but we are all of us not have that guts to hold, see that MTM losses, right? So better close at lower loss only. If you see, this is the how it's happening. Again, otherwise, you can add here, right? You can add one more short straddle. Market was trending. Now market came to 21,000. Then what would you do? Either you add 22,000 short straddle. Same way the way we adjusted in the lower side, we add. Now that upside break even would be more, but downside is less. But yeah, you can add. MTM loss would be there around 2,000 to 3,000, but you have very good upside break even. That's it. Otherwise, no adjustment is required. This is basically the strategy. This strategy basically is for not to do too many adjustments. That is the purpose of taking this long-term options. If the simple adjustments, You can stay in the trade for longer time with the minimum focus. You'll make good money if you have more patience and market takes directionally favorable to you. That is the upside adjustments. That's all. We covered lower adjustments and upside adjustments. That's all. What else? Anything else? Maybe, yeah. Finally, let me cover up this risk management. Maybe you would ask, right? If somebody asks that, what is the risk or capital and all. So don't take more than 1 or 2 lots, more than 2 lots, because initially it appears it is locked only 1 lakh or 2 lakh. No, for our adjustments, we need to spend more. So when you want to take this long-term options, have 10 plan to have 10 lakh, assign 10 lakh capital for this trade, which means don't block 10 lakh itself in your account. Anyway, you pledge the amount, right? Keep in mind 10 lakh is allocated to this trade. Take 1 lot, so 2 lakh is blocked. Balance is 2 lakh. Balance is 8 lakh is there that you use for pledging for intraday or expiry trading for other purpose, whatever. But your mind should know that you are using this for 10 lakh for this trade. That is for per lot. You have to plan. So every 10 lakh we have for this trade, you can take 1 lot. If we are planning for 20 lakh, you can take 2 lots. So because market is at almost all-time high. Market is supposedly market. So you are entering this long-term options. The market is at 19,000. Let's say market is 19,000. Same strategy, same strike, 21,000 only. 21,000 only you have to start. Then maybe you can take 2 lots. Market is lower break even. Let's say you are not taking the strategy at. Market was corrected, came down to 19,000. Then that is the time you can take 2 lots. The market is all-time high. Now you prefer to take 1 lot. That is the guidelines I can tell you. Now another risk. 2024 we are having elections, general elections. Something, if stable government doesn't come in force, then we will be in trouble. Definitely, market doesn't like stable government. Stable government doesn't like hung. That is the case. Market take correction. We don't know, right? That is the risk. If that is a risk, risk number 1. Risk number 2, you may think, what Ganesh, tomorrow gaps down market 10%, 15%, and 20%. We cannot rule out. Market can. This is a market. Anything can happen. Anything is possible. Then what would you do? What is the solution? That is the time. What you can do, maybe let's say this is a trade you taken, right? Add weekly. We know what is the support, right? 19,800 is found to be long-term support. So what would you do? Add every week. Let's say this is one. Okay. This is upcoming is buy. Let's say buy weekly option. Buy weekly option. It is around 1 rupee, 1 rupee 60 paisa. Buy this one. You feel that Black Swan event happens overnight or next 5 days. We don't know. If you are, that is a valid reason, valid point, valid risk management. We have to do that. So in that case, buy weekly option for 1 rupee. We can afford it. It comes to just to no cost, right? 0 cost. Almost you are getting 0 cost. So you buy 19,000 put option every week for 1 rupee or 1 rupee 50 paisa. Well, it costs nothing. Then downside loss is completely protected, no loss. So what I would recommend during election time or election months or before it comes, plan to have follow this practice. Have a 1 rupee or 2 rupee option every week, or if you get a good price monthly, you can buy it, hold it. Or if you, let us say market today comes to, in a hour after taking strategy, market comes to 20,000, 20,500 or 21,000 itself. Then below 1,000, you plan to have a hedge. Or you can plan to have a in the money hedge also. Let's say, no, I don't have time to plan for weekly, or I don't like. Then what you can do, you can plan near to election. Just I am not able to put all these points in this, but just listen. So what you can do, take in the money hedge near to election. Let's say 2024 in the month of maybe March, April, February, March. If it's VIX is, if you feel VIX started rising, then what would you do? Buy, let's say now market is 20,000, 1,000 above, you buy option. Let's say 24 only, 2024. What would you do? So this is the strategy you taken. Yeah, if it comes to 21,000, you would buy. Otherwise, buy it would in the money. What I prefer, buy in the money option, like this. So market goes higher, let's say 21,000 or more. If you feel of general election is a threat, then buy in the money December put option. That case, you will be no loss downside. This is the one, right? So let me put this risk management part here. Risk management part, right? How do you handle risk management? Number one, buying weekly option, or number two, buying in the money option for December month itself. In the money per December. When do you take? Not immediately. When you feel that threat, market is sensing the sentiment that general closer to general election. By that time, value would be very less, because hedging we don't need to cost invest more. That time, buy in the money. Then be peaceful. Right, upside would not take top 15-20%. Right, very rare chances. Even it goes, will be good profit, or we can add one more short straddle. No issue. Upside is absolutely not an issue. Only downside is the risk that we need to address. That was addressed here, either weekly or in the money options. Otherwise, always there, exit the trade itself. So either thing, you can take a decision based on the market sentiment at that time. That is a risk. And capital adjustment, I think I covered it, right? 1 lakh, 10, every 10 lakh, you need to spend 1 lakh based on the spot. That's all. And maybe someone of you asked me about like 3 months and 6 months, 1 year. Yeah, see, I told in the beginning, right? Predicting the market for 3 months, 6 months, not so easy, not comfortable, because that too upcoming till elections, it's not good to go for 3 months or 6 months strategies, quarterly strategy, because generally VIX tends to go high, not fall. VIX is already at the bottom. From here, chances are to VIX rise higher than fall back. So very tough to manage this volatility and delta negative strategies. Still, we are good. We know several options, then one can try. But personally, I don't prefer to take too many strategies. Yeah, one lot and all we can try. But rather deploy capital for calendar spreads. That would give you much more benefit than plain vanilla short straddles are on the current VIX environment. Yeah, that's all, guys. I covered everything on the long-term options and your questions. Any other questions, anything you feel, please do let me know.
Sir, can we try ratio for the slow wicks? Like 1:2:3?
Yeah, I think in this group there is a calendar spreads topic is there. Under that we are posting the ratio spreads only, calendar ratio spreads. Yes, we are doing every month. We are doing, we are publishing there. You can check it out there. There are the
Yes.
videos as well in YouTube. What are the ratio spread? How to do that? Yes, you can try.
Yes, sir. I'm also part of it. I'm also doing the 2:1 ratio calendar
Yes.
for monthly. So for the leaps, I'm asking for the June month. What I have did is, I have taken the 17,000 put as the bottom support and 22,000 C as the top resistance. So I sold 17,000 put 2 times and 22,000 3 times, and I bought 18,000 put buy for a June month. All this
Okay.
I did for June month. Because considering this election and all those corrections might come, so I have taken that. So is there any positive or negative on that strategy?
I think so. When you share entire payoff and all, maybe in the group you can share. We can discuss it where exactly. But yeah, I think you shorted 17,000. You shorted
Yeah, June
uh,
month,
June month. Yes, June month, and also you shorted 20,000 also, right?
22,000.
22,000. So what is the break even lower side and upper side?
Lower side is it is 15,429, and upper
Uh-huh.
side is it is 22,190.
Yeah, this break even shows very comfortable zone.
Yes, sir.
You can hold it and watch the per decay. But thing is only Vega negative, right? So that is where you need to be very careful. So delta negative, right? So if it VIX rising, then MTM shows very high
Okay.
until it comes to reaching to expiry time. Otherwise, it is fine.
Okay, so how to adjust that Vega, sir? Is there any
Huh.
possibility?
No, this we cannot adjust. We just will when we enter this, we keep adding another sell option zone. That is how we can manage uh, delta negative. To neutralize, we have to keep neutralizing the delta negative. But like that only we can manage. But having seen the range, but that's short term problem. But long term, it's okay.
Okay, okay.
So every time we should not go for adjustment every time. Though it
Okay.
is showing MTM losses, that is okay. MTM losses because of rising VIX and delta negative. Being that two factors, it would show you loss sometimes, but nothing to worry. As long as you are in a broader range, nothing to worry.
Okay, okay. Thank you, sir.
No problem. All right. Any other questions from you guys? Otherwise, we'll wind up the session.
So we need to start with the 2 lots in this. I mean, 10 lakh we are blocking, right? So starting with two lots of this, or should we start with 1 lot? That 10 lakh capital allocation is for 1 lot or two lots.
Yeah. See, as I said, market is closer to all-time high. Prefer to go 1 lot. Market is lower, like a break even at a lower long-term support. If you enter that time, you can take 2 lots. Let's say market is at 19,000. We want to enter short straddle. That time we can enter 2 lots. So market is now almost all-time high. So better to 1 lot. Because why 1 lot? Let's not get into all at once. This is a long-term options, right? Have a capital, means use it some other purpose. Because when it comes to adjustment, that is the time we'll add 1 more lot. Start slowly, start smaller and add small, then it will become big. If we start big now itself, it becomes more bigger and biggest. Then it will become that to block more capital. Hope it's clear.
So
Yeah.
yeah. So on downside, like we discussed, one option we have to create synthetic future. And what is the other option we discussed? We need to create 1 more straddle, right? At
Correct.
19,000.
Yes. Yeah, we need to add 1 more short straddle.
Okay.
At 19,000
So-
or 20,000. It's up to us that based on the sentiment.
And if market keeps going, then how we need to adjust that time?
Yeah, first, even if it breaks 18,500 also or 18,800 also is breaking. Due to if it is breaking 18,800, 18,500 also means it's kind of a 1,000, 1,500 points correction means definitely something is abnormal situation would happen. That is the time is better to close the setup. That is the first adjustment. Second adjustment, at any point of time I don't exit, I keep adding adjustment means then we'll be in trouble because we are taking this strategy this is a bullish strategy, right? We are entering in the money short straddle means the strategy name, the nature of the strategy is we are expecting bullish. Rather than bullish, market is very bearish. There is no point. We'll add adjustments, right? Keep adding adjustments means keep getting more issues because market is getting corrected 2,000 points. Within a week itself, market start rising up. There will be in trouble. So better if it is adding one short straddle, even still going down, close the setup. Live with peace. That's it. Or alternatively, what you can try, maybe I have not told you in the adjustments, close the loss making legs. Short puts, exit the short puts and roll down the puts, another 1,000 to 2,000 points down. VIX would have risen up by the time, let's say 19,000 or 21,000 we shorted put, right? Then close the 21,000 put and roll down that to maybe 16 or 17,000 put. So you book the loss and roll down the put, wait and see. Means the now ultimately short straddle is being converted to short strangle. That is another adjustments you can plan.
Normally, I have observed that in the beginning of year, like in Jan, Feb, March, market tend to go down only. Most of the time, if you see the monthly chart of Nifty, most of the years it happened.
Yes, sir. See, once we enter the trade, future is we cannot predict. So we have to keep take decision as per the market sentiment, and we have to be ready for plan A, plan B, plan C. We have to deploy the plans as per the market direction. Any other questions or anything you guys want to share or want to ask?
Sir, please create one video for bonds G6 if possible, sir.
Yeah, I think, but there are very good videos already from different professionals. I think you can watch. I think Sensible guy or Jeroda from there, that is available. Which is already available. Why to put a repeated one? I'll share that video. I think I'll found it. I'll share it in the group itself. Maybe you can watch it.
Sure.
Okay, guys. I think we'll wind up the things unless you have any other questions.
Thank you, Mr. Ganesh.
All right. Thank you all. Thanks very much for joining.
The VIX is very low. We are taking the leaps for the 2024 leaps.
Actually, yes. VIX is low. That is a not favorable scenario to take this short straddle. If at all somebody wants to take today or this week, no option. Somebody wants to wait to VIX rise before election, yeah, one can wait. So this long-term options, there is no time. We need to take today or this week. You can take any time. You can wait 1 week, 1 month, 2 months. You can take based on the VIX. Higher VIX is the advantage. If we catch the higher VIX, we can. But what is the thing is, while market is going up, VIX will also normal VIX also goes higher. Today we enter 19,500, 800. You will get a spot. This is a bullish in the money bullish strategy, right? If you wait VIX rise, of course certainly VIX would rise. Let's say VIX goes to 15. Then market would be around 20,500 or 21,000 by the time. If you enter that time, you will get lower break even is very low. you miss that decay of the time. That is the thing. So win and win. VIX rises, market also goes higher, and again, if your market comes to 21,000, we have option to take a short strategy at 22,000. If we enter 22,000, then lower break even is very low. Of course, you will get higher break even more, but lower you will get very low. The range you need to plan. So, but what I want to say is this long-term options strategy is not the best, or everybody has to try. I don't see that. I don't say that. This is an optional strategy. One can think of that when situations and time is good for us. Otherwise, you can focus on regular strategies. This is not very important strategy for all of us to focus. Those who do not have enough time to see, monitor and time, they can focus. Otherwise, not required. You can avoid also.
Hello, Ganesh. Do you have any video on covered calls? How do you approach selecting stocks, etc.?
Oh yeah, covered calls. There is entire playlist in my channel. Several things are there. Yeah, maybe you can check it out. There is a playlist. If you go to Smart Investor, there is a playlist. In this, you can find out. If you ping me or in the group, if you didn't find, and I'll share you again. Anything else, guys? Please do subscribe to YouTube channel and also Telegram channel. That is the one daily up to dates. Whatever trades we take, whatever adjustments we will make, that is a good platform for all of us to learn together and share across learn from each one of us. So utilize that platforms to learn and more. So please do subscribe to YouTube channel and share it across for your friends, those who are interested to learn. So very good content is being posted on the channel, real trades that we take and we're sharing. So you learn from each one of us. Thank you very much for all of you join. This video is recorded and maybe uploaded to YouTube channel for when we get time. We'll winding up the session. Thank you all.
Thank you. Thank you.
Thank you.
Thank you, sir.